Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome everyone to Poised for Exit, the exit planning podcast show. Today's guest has been named a Forbes Best in State Wealth Advisor for 2024 and runs a national franchise. He's worked with numerous business owners over the years, and so you are going to want to stay tuned for this interview right after we hear from our show sponsors.
Right now, there's a record number of buyers looking for businesses, and many businesses are selling at a premium. To get a free, confidential business valuation so you'll know what your business might be worth, contact a broker at Sunbelt Business Advisors at 612-455-0880. We're Minnesota's largest seller of companies. Let us help you maximize your life's work. Call 612-455-0880 or visit sunbeltmidwest.com.
Are you looking to add enterprise value to your business through effective marketing? At Evolve Systems, we craft custom marketing strategies designed to achieve your goals. Our comprehensive approach covers everything from branding and digital awareness to advanced lead generation tools. Positioning a business to sell in today's M&A market is not only challenging, but can be difficult without the right marketing strategy. We capture your ideal audience with clear and effective brand messaging that drives more deal customers. Let's evolve your business together. Reach out to us at 651-628-4000 or visit evolve-systems.com to start the conversation today.
Selling your business may be the furthest thing from your mind, but that doesn't mean you should wait to plan. At TrustPoint, we understand the nuances that come with selling a business and are here to guide you. From unlocking tax efficiencies to minimizing risk, we'll develop the strategies to ensure you're prepared. So, when the time arrives, you'll be ready to enjoy the best years of your life. Learn more at TrustPointInc.com. That's TrustPointinc.com.
Welcome back, Poised for Exit listeners. Our guest today is Mark Cheeley, who is the president of Synergy Wealth Management, which is a franchise of Ameriprise, a private wealth advisory practice. Mark, welcome to Poised for Exit.
Thanks, Julie.
We finally got you here.
Yeah, finally.
It took a little while.
I'm glad to be here.
I'm so glad that you are here. I have had some great respect for you and your practice and your reputation since I got to know you several years ago when I was working with a client of yours. That was how we met.
Yes.
Yeah.
It was fun to work together.
It was. Yeah. Yeah. And they ended up having a good exit outcome.
For sure. Yeah, they had a lot of great things to say about you.
Yeah. Yeah. They were good people. Well, they're not dead. They're still alive. They're traveling. I think they're having a good time right now.
That's
so they're not worrying about running their company anymore.
Yeah, definitely. Retired and relaxing in Florida, I think.
Yeah. Well, good. Good to hear. Well, we're going to talk about you and your practice. And I like to start out my show with my guests just kind of sharing a little bit about how you got here.
Yeah.
Like here you are, you're a practitioner and you have a financial planning practice, a wealth management practice, but you're also an entrepreneur.
Correct.
And you're running a team, you have a business, you got a franchise with Ameriprise. So how did you get here?
Yeah. So 26 years of being in the business and, you know, starting out just growing the practice very organically, really cold calling. But what brought us down the path of working with a lot of business owners was working with other professionals and working with a lot of CPA firms, people like yourselves, kind of defaulted us to getting an expertise in working with business owners. And they tend to be a little bit more challenging cases. So we really appreciate working with business owners and really solving that puzzle.
Yeah, challenging for sure. Trailblazing too, right?
Yep.
Which really kind of requires that you have more than one way to skin the cat. In other words, you've got to have different paths and different strategies and different areas of expertise, which I know you have. And so we should probably talk about, you know, your team at some point and the different areas of expertise and the offerings that you guys have got on board there. Maybe we could talk a little bit about, I know that you said that you started working with owners, but like before you actually got into this business, what was it that interested you to be in this business?
You know, I saw through my grandfather, actually, he was just a very hard worker. And when I was in college, I switched over to a financial planning degree kind of wanted to own my own business. And I knew the harder that I worked, the more it would come back to me. And so it's just very similar to the other people that we work with. And I can really relate to them by owning my own business. And financial planning is just an interest that I've had with the stock market and meeting new people and developing relationships. And that's kind of everything that brought me down this path.
Did your grandfather do that same kind of work, or what
He
was
didn't.
it?
He was a very hard worker and blue collar, and I kind of wanted to not follow the exact path. I mean, he went through the Great Depression. He didn't have the same opportunities that we have nowadays, but that work ethic really carried through, and I've appreciated owning my own business and applying that to my own business.
Definitely. So let's talk about scenarios. Like you've had, I mean, in 26 years, obviously you've worked with a lot of business owners, and I know you do. I said that at the beginning of the show. And so you probably got some interesting stories that you could tell.
Yeah, just thinking of a couple different business exits in the last couple of years, or some that are in the process right now. And, we always start out with doing a financial plan, and doing a financial plan will really help us take a look at the holistic picture and start to identify some of the opportunities. We also, in most cases with business owners, will also bring in our advanced advice team. And with our advanced advice team, we do have attorneys and accountants that work right within our company that will consult on each case. They don't replace any of the existing professionals that a client would be working with. They don't draft any documents. But what they try to do is find ideas that are out there that, maybe that client hasn't thought about, or maybe their current professional, we want to bring up an idea that they maybe haven't brought up to that client. So in the last probably year and a half, if we just think back at some of the deals that we've helped people with, if we look at more of a small business, more of a Main Street retail business, we had got referred to a client that was already in the negotiation process with a key employee of selling their business. And they had never really used a professional in the past. They did all of their own investments. And what we were able to do is get in there and show, gosh, we could probably save a couple $100,000 or defer a couple $100,000 on this transaction by putting a deferred compensation plan in place. And with that, we were able to take some of the proceeds of the sale, put it into more of a retirement plan, and defer that and spread that tax liability out for when they need it and when they use that for retirement income in the future. So that was, fun to do. And we've done that a handful of times with business owners in the past. On the larger side of the business, it's a little bit more scrutiny, which you see, if you're selling to private equity, you want to make sure that financials are in alignment and nothing can be really picked apart. So a couple of different businesses that we've worked with in the last year, we've made changes to make sure that the books are really set. So when private equity comes to take a look at them, they can't really poke holes in them. And that way it'll result in a potential higher sale and better negotiation.
So is that happening through your advanced advice team within Ameriprise, or is this your collaboration with the client's current advisory team?
That would be just collaboration with other professionals in our network that we think that would be a good fit for them. And we don't want to necessarily go in and disrupt their current professionals, especially if they're good, we'll work with them. But in this case, they probably would have been, eaten up a little bit in that due diligence process.
Yeah, I think in the work that I do, because I start that process 2-3 years right before a sale, ideally anyway, maybe even more time if I have the time. But shoring up the financials is huge. I kind of call the work that I do pre-due diligence, because even if you're selling internally or externally, right, you still want to set it up for success, because it's going to make an impact on your future as the seller regardless.
Yeah, I think that's such a big deal. And I know that, you've written about that in your book and really coach people on how to get ready earlier than what they probably a lot of people think they should.
Yeah. Well, even if what if something happens? Well, they have to be ready, right?
That is actually something I wanted to address.
Yeah, let's talk about it.
I think, if you look at the statistics, most people we work with, have an idea of when they want to retire, and most people have, they're not selling businesses and buying new ones that we work with. It's something that they've worked hard on for many years, and they think that they're going to retire at the normal retirement age.
Yeah.
And as you've seen, things can happen. And so the statistics show 50% of people exit earlier than what they plan to. And I think we've all seen that. And it could be disability, disagreement with a partner in the company, could be a divorce, could be a death. So we want to make sure, too, that all of the professionals are in alignment well ahead of when people expect. just to make sure that if or when something like that comes up, that they're going to get the value that the business is worth, and their family members are going to be taken care of, and
Right.
things like that.
Well, and as the boomers continue to age and continue to hang on to the ownership of their businesses, this just becomes more and more important for them to be ready, even if they don't plan to ever exit completely, and many of them don't, at least to be ready in case something happens. And then conversely, what if opportunity knocks?
Right.
It may never knock again. I mean, I'm not trying to be pessimistic here because that's not my MO, but it can happen where you have one chance at like the opportunity of a lifetime, right? I'm thinking of one particular client that wasn't ready, and boy, it would have been amazing. Yeah, we just didn't have enough time together, and all of a sudden, this company came along, a PE firm, and then once we went through the process, they said no.
And I think on a daily basis, you're in the grind of the business every single day, and a lot of times you don't take a step back and put everything in force that should be in force, and people are just coming to the table way too late to plan on an exit.
Well, from your perspective as a financial advisor, and then you've got your team of experts already set up within your franchise, you're doing some of the exit planning work. Like you're leading the charge. You're the quarterback, so to speak, right? So tell us about what that looks like from your perspective in your role.
Sure. Yeah, most of the time, we want to start out with a business valuation, just because we need to know what the value of the business is to actually do financial planning. And then what we'll do is we'll gather personal assets and liabilities, and then talk about the client's goals, timeframes, and then work on a financial plan. That's when we'll bring in these outside experts, start to assemble the team, start to identify gaps in the financial plan. And we'll actually go to meetings with these clients. With that client that we worked together with, we had several meetings that we were in the same room with the client. And, we'd like to do that with all our different professionals. The net after-tax amount of money that you'd put in your pocket after an exit is a big thing, and a thing that needs to be correct. So working with accountants, bringing up maybe some ideas that they don't bring up, all of that can, bring that larger net amount to their pocket, which then can help them out with their, the rest of their life.
Yeah. And, I say this all the time because I teach a lot of advisors. And I always say there's never one single advisor that has all the answers. We need each other, right? But when you have all those brains around the table, like rowing in the same direction, helping the client, collectively we get pretty close to having all the answers, right?
Oh, I mean, it's a powerful team. It's kind of fun what comes together when we all work together.
Yeah. I mean, and think of how empowering it is for the business owner to have all of those people on their team helping them to achieve the best possible outcome from their life's work.
Well, it takes the stress off the transaction when you have the right people in place that are knowledgeable. And the value that gets brought through that full team, I think the people don't even realize that value is going to be so significant when they start the process.
Yeah, I think that's key. I really do. And I think that's one of the purposes of this show is to be able to illustrate and tell stories about what can happen. Like, what's the best case scenario? How do we get you from here to there? Well, we get you from here to there by working with people that know the process and have your back. So let's talk about your team, like the people that you have, the specialists on your team, and the different roles that they have and how you help your clients.
Yeah, so our team right now consists of 6 different people, and Katie Pennington on the team just got her SEPA, so we're happy about that.
Cool.
And that's a designation that is around exit planning. And so she, as well as myself, enjoys working with business owners. But we usually take the lead in working together on a financial plan and working with the clients. So you're going to get both of us when you come through the door and work with our team. The rest of the team is support staff to help collect data for the financial planning, obviously appointment setting, and we'll also have a lot of interaction with the client as well. And like I mentioned before, a lot of times we'll also then be leveraging our advanced advice team too, in addition to the core team that we have. But, there's usually, I would say, probably about, depending on the size of the business and the financial planning we do, there could be 5 to 10 meetings up front to get through an entire financial plan. And then from there, we'll typically start to meet on a quarterly basis. And then after that, after the dust settles and we get everything in place, we might continue to meet quarterly, but then we'll usually go to a semi-annual meeting at that time.
Yeah, I think that the word plan is kind of the magic word here, right?
That's right.
Yeah, I think that the owners that I've met over the years many times have a misunderstanding about what it means to work with someone like you. And they think that, well, most of my assets are tied up in my business. I don't have any money to invest right now anyway. So what do I need somebody like Mark for? And my answer to that is you have to have someone like Mark on your team. Like, you're the most important person around the table. You're the person who's there now. You're there during the whole process of when, like, maybe I'm working with them. And then you're there after all of us go away.
Yeah.
Right? Yeah. And so, you have the whole holistic, like, view of not just the owner and their business, but their family and their lifestyle and, what their goals are for the future and things like that. So huge.
Great point. I mean, I think the term financial advisor gets used pretty loosely in this career, and there's a lot of people that don't do true financial planning, but can call themselves financial planners. And so you really want to be careful on making sure that you choose the right one that does real financial planning. It's a standalone document that provides value to the client. You don't want somebody that is either doing a little boilerplate, what they call a financial plan to sell a product, or just waiting for the windfall from the sale of the business or the business proceeds.
Yeah, the plan is huge, because how do you even know when you should exit if you don't have a plan, right? It's like I say it all the time. We're getting in the car and driving around, but we don't know where we're going.
Right.
Right? We don't know when we're going to run out of gas either.
Yeah. So, I mean, and it really takes the weight off the shoulders of the business owner to not be stressed out knowing that they've got this plan in place.
They have enough on their
be okay.
Yeah, they got enough on their plate for sure. So some of the other strategies that your team specializes in, because you work with so many business owners, let's maybe talk about a couple more, maybe high level ones that maybe would apply to maybe a high net worth business owner or someone with a larger company that has maybe a little more complication.
Yeah, that'd be great. So there are some unique things that can be done within the tax laws and different products that can help people save taxes on the transaction for sure. And one thing, I'll just maybe go through some different ideas that we've done in the last year or so. 1031, a lot of people have heard about with real estate and with business owners owning maybe buildings or real estate tied to their business.
Yep.
A 1031 exchange can be done so that you can sell the business. And if you don't want to exchange it into a new business and have all the headaches and hassles with managing an investment property into retirement, we do have a product where we can 1031 into own really, institutional, nice properties within that product, not have to manage a thing, have that tax deferred on it, and then collect an income stream off of it. And after a couple years, if you want, you can sell shares and spread that tax liability out over time, or you could wait and have a step up in basis to the next generation. So that's worked out well.
So it's an actual, so I own an office building. I'm going to 1031 my office building, right? So the money never touches my hands,
right?
Because it can't. And you guys invest it into a real estate fund. Is that what you're talking about, or?
Yeah, it's DST real estate fund that's set up specifically to apply to those 1031 laws, and it's just worked out well in the sense that people don't want to have the headache. Some people just want to walk away from the business and the real estate at the same time, and not have to carry that burden into retirement.
Right. Yeah. Back in the day when we owned a title company, before I became a business consultant, we had lots of commercial business and residential business, and a lot of 1031s. So we had a law firm too. So we were able to conduct transactions like that. And I used to belong to a group that was a 1031 exchange group, and they're still around. Cool. Yeah, in the Twin Cities. Yeah.
So as you know, you have to follow the rules pretty closely.
Oh, yes.
And if you don't, then it
that's
can
right.
unravel.
Yeah, for sure. And it doesn't apply to everything or everyone. So
right.
But you got to have people like you that can explain the pluses and minuses. Does this apply? Should we look at it? Right.
Yeah. So it's really identifying those unique situations and how each one of these apply. And some of the other things that we've done would be, a cash balance pension plan on the sale of business, which I mentioned earlier, where you can put a significant amount of your money away into a type of retirement plan that's pre-tax. We had a business sell last year where the business had large capital gains, like most business sales.
Sure.
And with that, we did a qualified opportunity zone. With the qualified opportunity zone, that's real estate as well, but they're able to defer the taxes on the sale of that business out several years. And now the the time frame's getting a little bit shorter to do that strategy now, but they were able to defer their taxes about 4 years. And then all the future growth on that investment property and income will be tax-free over the following 5 years after that.
So would that be like, I mean, I know it's not the same thing as a donor advised fund, but would that be another like similar strategy?
Yeah, I mean, if you think, we use that a lot as well.
Sure.
That's a great thing to bring up because, you see a large spike in taxable income at the time of exit. So if somebody's charitably inclined, a donor advised fund is a great way to put money away, a large amount away in one particular year, take that deduction in that year, and then gift to the nonprofit organizations in future years. And so that's been a really great tool to use in high income tax years if somebody's charitably inclined. And some of the state tax laws are going to reset and sunset here in a couple of years. So that those giving strategies are something that we're really talking to a lot of business owners on right now to either potentially gift and use up that lifetime gift before it resets. And that's one strategy, but even gifting shares of a company could be another one.
Sure.
Or gifting assets. But there's I think a short period of time before, and who knows, they might extend the estate laws, but.
Yeah, I was just thinking about that myself.
Yeah, but it's a good time to be thinking about it.
Because we don't know, like, if that's going to be, extended or not. Actually, do you know who Christopher Burns is?
No.
Henson and Efron. He's an estate planning attorney, very well known, and he works with a lot of business owners. So he's going to be on the show in a few weeks, and we're talking about that very thing. So we'll have to see what he says and what his crystal ball says about whether this thing is going to get extended or whether we still have to be under the gun. Now, speaking of crystal balls, as we're kind of getting close to the end here, I want to hear what Mark Cheeley has to say about 2025. Like, what does your crystal ball say?
Crystal ball,
yeah.
Everybody wants to know that. But I think, we're having a soft landing right now with the economy, which is great. And we'll see there's some talk now that the Fed might have to change their strategy a little bit with the new administration. Is inflation going to slow down enough with some of the tariffs that might be put in place, or is that going to cause inflation to continue at a rate where they may not want to lower rates as quickly? So, time will tell on that. We do think some areas of the market are a little bit overvalued right now. And we've all seen that in our portfolios with technology. Yeah. So, things can be not as efficient with the market and can run for longer than expected. But if you're looking for some new strategies in the market right now, we like blue chip stocks, financials, energy, healthcare tend to be a little bit more valued than the technology stocks. But technology, as you know, is going to be a place to be for the long term. So we don't want people to get out of that at all, but maybe cut back a little bit after the run that we've had. So we could have a normal market correction at any time just to get back to normal PE ratios in the market. But we don't see any signs on the horizon of a recession and think that we could have a decent year.
Well, that sounds fantastic. Thank you so much.
Thank you. I really appreciate it.
Absolutely. Yeah, really great advice. Loved having you on the show, Mark. We'll do it again.
Sounds great.
Sorry it took so long to get you here, but we finally made it happen.
Yeah, well, thanks so much. We really appreciate the opportunity.
Yeah, absolutely. And thank you, listeners, for joining us. We really enjoy having you rate and review the show. Watch for us on social media, share the episode with your colleagues, and please join us again next time.